Just low enough volume to keep the markets up going into the weekend. We got a lot to talk about today. It'll just be me, but yeah, we got tons of stuff to go over in Asia, US, markets, all that and much more on today's episode of Money Never Sleeps.
Money never.
Welcome back to Money Never Sleeps. Just me today. Jweb, unfortunately, last minute had to go truffle hunting in Orlando, so he'll be back on Monday when we do our show. But for right now, we got a lot to talk about today. So weekly close, we've been talking about it for the past few days. Tons of low volume in the market. It's actually the eighth straight day of low volume. We haven't seen too much in the news today. It's been kind of a quiet way to end the week, but there are things that we should be keeping an eye on. Crypto obviously was having a bit of a pullback today. We're seeing some cracks in the wine industry. That's something that we don't necessarily talk about, but I think is important to talk about and bring up. So let's get into it today with the wine industry. Is that fun? Not necessarily, but I know some people are probably going to be like, why is this important? Well, it's important because it's a $55 billion industry. And it is also seeing the sharpest downturn since 2008. This is all from Macro Edge, something that we tend to follow all the time. And before I go any further, once again, nothing I say is financial advice. I'm not a financial advisor. Just a guy who's just rambling today on the weekly close. Excited to be here. Have some of you guys in the audience. Randy, thank you for always being here. Chris, I know you'll be here in a little bit. But yeah, nothing we say is financial advice. We're just analyzing the markets, seeing what's going on, things that we should be paying attention to, stuff that Jim Cramer won't be necessarily saying. That guy's been extremely bullish lately. So if you know the show, probably not going to be giving you the Jim Cramer take. But looking back at the $55 billion California wine industry, you can see that it's making a pretty big downturn. In terms of millions of cases sold, it's under 400 million going into this year. You can see that it's been selling off a significant amount. And why is this important? Well, this is pretty important considering that wine is somewhat of a luxury item. Luxury, it's not your Keystone Light. It's usually a bottle that you're going to be taking with your family, friends, kind of like an upper class type thing. Uh, we kind of saw this with Red Lobster. We kind of see this with Outback. We kind of see this with all those restaurants that were, kind of the middle class doing okay, starting to pull back. People aren't going as much. We started seeing a lot of people from that were in probably the upper class, wealthier individuals who are starting to, start to use some of those restaurants. It's kind of the weird thing what we're seeing right now. We're seeing this shift where everyone's starting to finally kind of live below their means, and this kind of lines up with that. Also, we know that unemployment is at 3.9%. We know that eventually it's going to come back down. Specifically in the state of California, unemployment has been rising significantly. A lot of that has to do with tech, but a lot of that also is just people are not having full-time jobs anymore. So it's going to be really interesting to see how this plays out. But this is just one sign that we have to kind of take into account and look at and say, hey, maybe there are bigger problems. We're not going to be told that at face value, but if we kind of dig deep enough, we can kind of see that we're starting to see this similar scenario of sharpest downturn since the 2008 financial crisis. You're starting to see a lot of those headlines across the board. So just something that we had to touch on. We thought me and Jay were going to get into it, possibly open up our own winery. House, I think, was getting in on it. But jokes aside, it's pretty much what we're looking at when it comes to the California wine industry. And again, just money is just not there. It's a $55 billion industry. No one's buying any of this shit. Doesn't matter. That's less money that's in circulation. Makes things even worse. So now that we got that fun stuff out of the way, I think we should go into the charts and take a look at what's going on the weekly close. Take a look at the S&P. Once again, green on low volume, man. This is maddening almost to kind of watch because it's something that's happening in slow motion. I'm sharing the wrong screen. Let's stop that. And let's go to the S&P chart. There we go. It's maddening to watch this in real time because everyone is extremely, extremely bullish. Yeah, I mean, Jim Cramer came out today and said that if the Fed stays hawkish, that means it's going to be extremely bullish moving forward. At some point, maybe, when all the chips are down and, everyone's packing it up for, I guess, their career. But right now, this is not necessarily this most bullish setup. And I kind of set up this Elliott wave theory scenario of where we could be heading if this is the top of the market that we put back in March of 2024, it's something that looks like this, and it plays out kind of into 2025. Again, this is more. This is probably more in line with the timeline. I'd probably say that these are just structures that we're looking at and seeing how it balance. But this is a 5-wave structure to the downside, which is what I anticipate the correction to be. Could be an ABC as well, right? And within those ABCs, it could be 5 waves, 3 waves up, and then 5 waves down. ABC completely done. That's how we play out. Once we get to the bottom of that 5th wave and that C wave of this larger macro structure, which could be A, B, C, something like that down here. That would be your bottom. That's just something that I'm watching. Obviously, these two levels down here, 2361 and 21, or I guess 2200 for the S&P are things that I'm keeping an eye on. Now, those are extremely bearish targets, and I know Jweb would be reining me in right now. Even House would be reining me in, saying that it's not going to get there. I say let's just wait and see. But for the time being, I'm bringing that up because I'm looking at this chart and I'm thinking that we're a lot of people are getting bullish here, even though the fear and greed index is out of whack. I'm pretty sure that we're getting to the end of this parallel channel, and the reason I say that is because the volume continues to decrease. It's the 8th straight day where volume has just been dropping, and we keep pushing up. Why is that? I think it's also pretty wild that we're doing this going into the weekend. Next week, we have CPI and OPEX. And I mentioned yesterday that OPEX is a $5 trillion worth of contracts that are expiring. So we're going to see a lot of people that are in the money right now that might be out of the money come that day. So I'm very much interested in seeing how this plays out, because I do think that there is a bit of a setup here for the VIX to rally if the S&P starts to tumble. And now where do I think the S&P could tumble to? Well, I think that if it doesn't hold support at 50.97, you're probably coming down between 49.54 and 47.81. I think that we're seeing a lot of these things, and we'll talk about them when we get into crypto, between the 50 and the 200 EMA. This is really important. Eventually, that's going to just be back and forth ping pong until something does break and it pushes below the 200, and then all bets are off. Good luck. We are going to be trying to find support wherever we can. Whether it holds or not, who knows? But the fact that unemployment for the past 2 months has been going up, and we're starting to see, more people for jobless claims, kind of seeing things turn around a bit here. So just something to keep in mind. A lot of people are bullish here. I can't buy it with this volume, and it's not just the S&P. Going to the Nasdaq, it's a very similar thing, very similar pattern. Dow is very similar as well, and all the stochastics are extremely overbought. Now the Dow is just filling gaps, in my opinion. I think that's what it's doing. Same thing with the Nasdaq. I think the Nasdaq was filling a gap. No, it needs to fill a gap. That's what it needs to do. It needs to fill a gap. But speaking of gaps, let's go to the VIX. And the reason I bring up the VIX is because apparently we filled the gap down here. Right here. This is the gap that we filled over the past few days. And the VIX is really good at filling gaps. I didn't catch this. Someone on Twitter actually pointed it out, and I was like, oh, that's really smart. Didn't even think of it pushing down here. So a lot of people who were probably, like me, max bullish on the VIX, probably didn't see this, but they filled this gap, squeezed people out of their positions, and now we're kind of sitting down here at the 2020 trend line, and it's like, well, this is a key level of support for the VIX. Right here, he's got in 2023, I should say June of 2023, July of 2023, and once again in September of 2023. And we found support back here in March of this year, March again of this year, February of this year. It's just a huge level of support that we're finding down here, and we're getting closer and closer to this key date. This key date that I'm looking at for the VIX is this apex right here, so everything breaks out, which is about Tuesday, June 18th. Now, it doesn't have to wait till Tuesday, June 18th. If I'm not mistaken, we go back to 2020. And I know I'm doing a lot of TA on the VIX. It's important to me because I do think that volatility can be suppressed only for so long before something happens. But here, 2020, we obviously know what happened in 2020. This would have ended around March 20th. So it ended that March OPEX. If we look at this for this time around, that June OPEX, which is the 21st, should be where we're kind of lining up. However, where this really went haywire was the February OPEX of 2020. And then we look at where we are right now. We're in the May OPEX of 2024, 1 month before this triangle wedge pattern kind of ends. So I think what we're seeing here, which could be the case, is a bit of a breakout coming soon. Now, it doesn't have to break out to, 2020 levels up to 85. No, not at all. But it has been hitting this trend line significantly. It's 12.66 holding that support line. But we do see when we do break out of these triangle, these wedges, it's pretty violent. I mean, February of 2018, 50. Obviously that one's higher up. Even this one here, we got a pretty good push to the upside around 31. And the reason I brought up the gaps that we're closing is because we also have gaps to the upside. And if the VIX does want to break out, some of those gaps are outside of, I believe there's one. No, not there. Let's see. There's one here around 14, which puts us back in the wedge itself. And I believe there was another one on the weekly or the monthly. I'd have to check on that one. But let me just actually do it now. Then let's see. No, might have filled that one already. My bad. Might have filled that one. But for the most part, we get back into that and we can see that the weekly's starting to get over, move into the oversold. I think we do have the momentum to push back up in here. And if we do break out of this a second time, break through the 200 EMA on the weekly, there's a good chance that we could have a really good vol spike coming this OPEX or right after it. I don't know if we get to June 21st before we start to see max volatility breakout, but it's something that we're going to have to keep an eye on. And the reason I'm bringing this up is because this seems to me like the most fun trade out there. It's the one that I'm following the closest in the US markets. Obviously, there's other things that are more important to me globally, but this is one that I think has the opportunity to spook the markets, bring the S&P crashing, 300-400 points, maybe faster than even I expect. But it's something that we're going to keep an eye on, and it just seems kind of suspicious that we're going into the weekends. Low volume, prices up, been up for the past few days, and the VIX continues to get crushed off of that. And we're seeing a lot of problems in Asia, which let's segue into that right now. Now, the dollar, obviously, I'm seeing people say that they're bearish on the dollar. I am not bearish on the dollar one bit up here. I do think that there is something that coming that is problematic and that could push us into a bigger push to the upside. So let's look at this. I would say that this parallel channel is still somewhat valid. We're finding lower lows and lower highs. It just seems like it's going on longer than it should, but every time that we broke out of it and broke under it, right back into it. So we're still trading in it, and it's not the most ideal pattern, but it is one that we're keeping an eye on. I think that we are looking at a pretty big move to the upside, and we're stuck either in a wave 3 or we're stuck in a wave 1 of a new pattern. But the reason I bring this up is because I think our next target, if this is the bullish scenario that I think that we are in, 107.193, if we break that, then you're in a very different position than where you were in October 2023 when things kind of flipped on its head. So that's the target we want to see for the dollar. And what could get us there? Well, one thing that could get us there is if gold sold off. Gold, not fun right now. It's being very resilient, as my giant arrow is pointing right at. But you're getting pretty overbought on the daily. You're getting very close to overbought. You're going to find out Sunday night when the market opens for obviously global traders. That's where you might be close to the overbought on the daily. And I think that we're probably not going to be putting in a newer high. That's just my opinion. I could be wrong, could be dead wrong. We could even pull this up a little bit. See, that's why we need more data. We need more candles in order to adjust whether this is a parallel channel. Something that we're going to want to keep an eye on. But I do think that this starts to pull back, and I do think that gold has a really good move to the downside. In my opinion, there's probably a good 17%, maybe 20% at least it could pull back. Not all right away, but maybe a good 11%, maybe in the short term, maybe a month or so. 2 months at most, or 2 months or so, I would say is probably a good gauge of where we could be. We could see gold pull back. It really depends on debt and global currencies. Let's pull up this. This is the other scenario that I'm really watching and why I think that it's really weird that the markets are low volume into the weekend. And this could be the biggest black swan that no one's talking about, except obviously us, because that's all we talk about on this show, it seems. USD JPY. They intervened right around the time it went to 160. They also intervened right around the time it was at 155. Well, we're at 155.79. It was up as high as 155.904. Getting close at 156. The worst case scenario is Sunday night, markets open in Asia, and this thing just goes right back. And if it goes north of 160, you're probably going to see a shit ton of US debt just absolutely offloaded, which would cause some panic right before OPEX. Are we narrative diving, trying to find something in all this noise? Maybe, but at the same time, it is something that's very real. We've seen that this level does scare Bank Japan significantly. They spent $16 billion worth of U.S. debt, or they've offloaded to save it. If it continues to get worse, it goes higher, you can only imagine that they're probably going to offload their ETFs, offload U.S. debt just to save the yen, because I think that's their main focus right now. But if they offload their ETFs, that would just cause this pattern too, and the Nikkei to absolutely roll over, which it looks like it's going to, right? We're finding ourselves closing the week under the 50 moving average on the daily. If we look at this on the weekly, on that, obviously the 50 moving average is far down. It's down here around 34.9 or so. But on the daily, you're below it. So you're probably going to come down and test the 200 if you do break from this. I mean, that's at least a move from where we currently are down to about almost 3.86%. And if that doesn't hold, probably coming down about 7.5%. Something to keep an eye on. But it's everything's kind of lining up for these trappish flags that we're seeing across the board. And we see a lot more of them in crypto, actually. But that's something that we have to keep an eye on Sunday night. It's going to be important because if they do sell off any ETFs, anything does happen with the yen and they are forced to intervene once again, that could absolutely just cause this Nikkei to look very similar to, see if I can zoom all the way back. It's a long time ago, guys. Long time ago. It looks something like this. This is what I'm pretty much saying, right? There's our little bull flag, and then eventually something happened, and straight down. Went through the 50 and the 200. Didn't give a single fuck on the way down. So that's just kind of the cautious things that we need to be worried about, and especially with the VIX, something like this happens. The exposure that we would see in the United States would just absolutely cause chaos as well. So that's one thing. I guess that's a couple of things that we are watching going into the weekends that are important, especially when everything kind of seems too quiet out there. Just something to keep an eye on. All right, looking through everything else, I don't necessarily want to touch on any of the stocks. I honestly think that everything is kind of BS here. Just my opinion, not financial advice whatsoever. Yeah, I mean, there's massive gap from Apple. Tesla, how you doing? Tesla maybe 200. Nvidia is still, it's fair to say that it could put in an all-time high. Obviously, it's not that far off from it, right? I could see Monday, if nothing happens Sunday night, maybe we get a little push before the earnings. There's a lot that could happen before and right after OPEX. It really depends on when the market decides to move or if anything does happen. But these things are definitely important. I should touch on this, though. Amazon and Meta, starting to see Zuck and Bezos sell off a lot of shares. They've been doing it all week. Just something to keep in mind. Again, there's not a lot of money out there right now. There isn't. You're seeing the banks they're not issuing new debt. People are struggling to make their credit card payments. We're seeing this ghost debt that's coming from things like Klarna and buy now, pay later. There's only so long before they realize that there's no one holding their bags, or the people below them are probably going to sell off. Just something that's, I think, a lot of these people that are in these positions and have a lot of shares, probably smart taking some profits here, especially if they have that much exposure to the market. There's nothing wrong with cash sometimes. There's absolutely zero things wrong with cash if you are looking to deploy it at a later date, at a more opportune date, right? So just some things in TradFi there, nothing too crazy to go over. Oil, you're getting kind of scary here. Maybe there's a setup for a push to the upside if something does break out, but I do think that we're finding some resistance on the 200 EMA. We were finding it on the 50, broke right through it. Now we're finding it on the 200. Obviously the stochastic can go, has plenty of room to move to the upside, but support and resistance right now. That's all we're looking at. We also have to think about demand. So there's that. Let's talk about crypto. We'll finish it off with crypto today. Nothing too crazy. No need to keep it much longer. But similar to oil, that 50 moving average, we were doing pretty good last night. Got rejected right from it. And now we're finding support right here at the 60,719 level. You're trapped between support and resistance right now, and one of them is going to give at some point. I'm looking at this and I'm saying, okay, this is a bearish engulfing candle right now. It's more likely that we break this and we move to the downside unless we start getting max bids around 58,000, which is possible. We start getting some bids in this area that hold that support, but I'm not holding my breath going into the weekend, right? I do think that it's getting weaker and weaker. We're seeing the volumes kind of decrease here. You're actually seeing the selling volume a little bit higher than the buying volume, which is kind of telling as well. I think this is purely distribution, 100% distribution. Eventually, this is going to break. We are going to test the 50. The 200 EMA, which is around 52,000. Just shy of 53,000, and maybe we get a bounce from there. If we don't, then we're probably going a lot lower than most people would like, maybe around 40,000, 39,000, and from there we probably get a really good bounce. That's just my opinion. It's, again, we talked about it yesterday. It's very similar to, I think, April April into May around 2022, where we hit 33,000, and then we kind of rode it up to 48,000. I guess it was March actually of 2022, and then you started to see the sell off come in the weeks that followed. You know, this is really interesting here. Bitcoin obviously is going to decide the rest of the market. I do want to say that some of these alts, a lot of people are saying that there is a bit of a bounce that can happen here. I agree to an extent. I don't necessarily buy the fact that it's going to do that, because what we're looking at here is you're kind of hoping that the support's going to hold for the next time. It kind of isn't right now. You're below this parallel channel. This is just on Matic. A lot of people are hoping that you're going to bounce from here, and then you're going to move up here to maybe around 80 cents. I mean, you can look at AVAX or take a look at Link. Actually, no, I think it was AVAX I wanted to look at. No, maybe it was Cardano. I don't know. All these look like shit to me, though. 50 and 200 look like they're about to get the death cross on the daily. You're kind of trading sideways. I mean, you can say the same thing for this here. You're below the 200 once again. Link trading sideways and below the 50 and the 200 once again. These are continuation patterns. So if these are continuation patterns, that tells me that the trend is to the downside, because we already see that we have a pretty good move there. So we could have another leg down. Where would that put us, say, for Link? Anywhere between $10.62, which would be holding on pretty important level of support, but you could come down a little bit lower between 950 and even 831. Those are pretty drastic down there. You'd probably have to see a major sell-off, probably with Bitcoin. Say it goes below the 200 EMA. That's probably your case where you're going to see alts see some pain there. But we're looking at the dominance. It's not necessarily doing much here. It looks like it's overbought. USDT is actually doing pretty well here. It's very sketchy right now in alts. If you're hoping for a bounce, you're probably hoping for the last bounce, in my opinion. I'm not gonna say that it is the last bounce. It's just what I see, and that's the reason why I'm holding off. I'm not touching alts or crypto or anything like that, buying or shorting it. I do think that low leverage is, if you are going to short it, is your best bet. And again, if you are going to trade this, maybe low leverage once again to the upside, spot. I just don't think that it's safe right now for me personally. I would definitely do your own research before you get into any trades like that. But it just seems like everything right now is kind of giving you some bad vibes. I mean, even Solana. Solana's been one of the strongest alts out there, but it's below the 50 moving average right now. It's finding resistance on it. Found it once here, once here, once here. It's 3 times in a row. You haven't tested the 200 yet. 200 is down at 114. So say we have a bit of a dump. That's a 21% move to the downside. Using leverage, say 3x, that's a 60% loss really quick, or 60% dump that quick. So it gets dangerous here. So that's why I just kind of want to keep everyone, safe for the most part, and just more knowledgeable of what's happening outside of what your favorite influencer is saying. I mean, you're seeing it for the total market cap. This one's actually pretty important, because now you're seeing the total market cap, including Bitcoin, under, what is this, 2.29 trillion. That's where the 50 moving average is. You're finding rejection off of it. I mean, the move from where it is at the 50 moving average to the 200 is about a 15, almost 16% drop in the market. That's literally your next level of support. If this 2.04 trillion doesn't hold, which is arguably about 7% or so away. So double that plus some change. That's pretty much where we could see a bit of our support hold. And again, we are really hoping that these 200 EMAs hold if we're bullish on the market, because if they don't, then that's chaos there. So, yep, that's pretty much, I think, all I have for today. Just checking one thing real quick just to make sure we didn't miss anything. I think it's going to be an interesting weekend. I think it's too quiet out there. Maybe it's not this weekend, maybe it's next week, but there's a lot of things that are out there that we need to be keeping an eye on. No, that's literally all I had. So I think we'll leave it at that. Thank you for, we'll leave it at that. Randy, thanks for always being here. Chris, I know you'll be here in a little bit. I said always appreciate you watching the streams on the replays and everything like that. Jweb and I will be back Monday for a show. Hopefully he's done picking some truffles in Orlando. He should be feeling better. And I think we're going to leave it at that. Once again, not financial advisors, nothing to say as financial advice. We're just taking a look at the markets and seeing what's out there. Everything you have to do is 100% your own responsibility. Talk with your own financial advisor, make your own choices, yada, 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 all that stuff. We're not financial advisors. All right. Randy, have a great weekend. Appreciate it. Thanks for always being here. It means a lot to me and Jweb. If you forget before you head out, like, comment, subscribe, all that. Share us out. And we'll see you guys Monday. Have a great weekend and take care.